Hello traders and welcome to the London Forex Broadsheet's weekend wrap of the markets. The euro advanced during the Asian session after making a new low for the current year on Thursday, as the market now expects a rate cut as soon as the next ECB meeting. However, during the European session, a pair retraced some of the gains made earlier to trade just above the neutral pivot point at 1.3855. The pair continued to decline in early New York trading, then advanced after the non-farm payroll report said that U.S. lost 159,000 jobs in September. In economic news, retail sales in the euro area rose in August 0.3%, up from the previous month when retail sales only rose by 0.1%. The service side of the economy in the euro area has been in contraction for at least the last 4 months, according to the latest PMI release. The release number of 48.4 is near a 5-year low, and the economy is struggling to show any sign of growth amid a global slowdown. The euro is still trading along the downward sloping trend line, finding resistance at 1.3900 all week long. The pair also made a new yearly low of 1.3700. The last time the pair saw this area was in September of 2007. The pound had a similar trading pattern to the euro during the overnight session, advancing 100 pips during the Asian session to the LFB R1 at 1.7715 and then retreating somewhat during the European session. The pound's volume overnight was low, even though during the previous trading day, the pound traded on very strong volume. The pair finished higher for the first time in a week after traders speculated the Fed would cut interest rates at its October 28th and 29th meeting. In economic news, the UK service PMI came in at 46, much worse than market expectations. The release shows the service side of the economy has contracted for more than 5 months, hitting now a record low for the time being. The sterling has found some support in the 1.7550 area, with resistance seen at 1.7875 and 1.8120. Next week, the UK will be releasing their interest rate statement, where economists are forecasting a 0.25% cut to 4.75%. The Aussie advanced slightly during the overnight session after hitting a 14-month low on Thursday on renewed concerns about global commodity demand. During the Asian session, the Aussie gained a modest amount of pips but gave them back during the European session. The pair traded higher in New York as traders bought risk after the House passed a $700 billion bailout package. Inflation seen in Australia increased for the month. The private sector found that inflation increased 0.4% over August, and the survey found that full-year inflation increased to 4.5% after being 4.2% on the year last month. The steep decline in value of the Australian dollar was responsible for much of the increase seen in consumer prices. Australian demand for services has shrunk for the 6th month in a row in September. The AIG Services Index gained 5.6 points to 44.9 from August, when the index fell to its lowest level seen since the survey began in February of 2003. The Aussie is still trading in the descending triangle pattern. Historically, this pattern breaks to the horizontal line, which is at 0.7675. The CAD moved flat during the Asian session, but during the early European trading hours, the CAD found additional momentum and fell near the neutral pivot point of 1.0740. However, since then, the pair has recovered some and is back to trading within the tight range. The pair declined in New York when crude futures advanced slightly. The loonie is trading in the center of a well-defined 150 pip upward channel on the 1-hour chart. Stair-stepping its way higher, it is easy to see the support and resistance levels. The Swissy fell 50 pips overnight after testing the 1.1400 area on Thursday, where the current high of the year is. This is the first time in 4 days that the Swiss franc is strengthening against the dollar. The pair continued to advance in New York after the non-farm payroll report for September increased speculation for a Fed rate cut. In September, the Swiss CPI read shows the economy is experiencing inflation despite the recent trend. The released number of 0.1% is bigger than market expectation of negative 0.1%. The year-over-year read stands at 2.9%, while in September of 2007 the CPI had risen only 0.7% from 1 year earlier. The Swissy has been trading within a 700 pip range over the last 30 days. The pair recently found support in the 1.1250 area, which corresponds to resistance seen 3 times in the recent past. The yen traded mixed during the overnight session. In Asia trade, the pair fell to the LFB S1 at 104.85, while during the European session, the pair slowly moved back into positive territory. The pair advanced strongly in New York until the House voted to pass the bailout package, but still looked to finish the day with a moderate gain. The yen is still trading within the confines of the descending triangle, again briefly touching the downward sloping trend line currently situated at 106. On the upcoming economic calendar, there are no top-tier releases scheduled for Sunday. On Monday, at 0830, Canada will be releasing their building permits, and then at 10 a.m., they will also be releasing their IV PMI. At 2330, Australia will release the cash rate, and then their accompanying statement. In Asian equities, the Nikkei fell 216 points or 1.94% to close at 10,938. This is the lowest level reached in the last 3.5 years. The Australian S&P ASX declined 65 points or 1.38% to close at 4695. In European stocks, the German DAX gained 136 points or 2.41% to close at 5797, and the UK FTSE rose 109 points or 2.26% to close at 4980. On Wall Street, at the close of floor trading on the New York Stock Exchange, the Dow was at 10,325 after losing 157 points or 1.5% for a swing of over 450 points. The S&P closed at 1099, down 15 points or 1.35%, while the Nasdaq finished trading at 1947 with a loss of 29 points or 1.48%. Crude oil futures for October delivery dropped $1.09 to $92.88 per barrel. Gold futures for December delivery were down $11 to $827 an ounce. In treasuries, traders bought treasuries in a bid for safety. Yield on the 10-year note fell 1.7 basis points to 3.61%, while the yield on the 2-year note lost 2.1 basis points to 1.59%. Overall, the threat of recession grew on Friday after the non-farm payroll report said that the U.S. economy lost 159,000 jobs in September. This is the most since March of 2003. Sectors losing jobs included manufacturing, construction, and many of the service industries. The unemployment rate remained at 6.1%. Average hourly wages rose 3 cents or 0.2% to $18.17, up just 3.4% for the year. The Service ISM Index lost 0.4 points to 50.2 in September, but the sector expanded for a second straight month. While the report was acceptable, especially under these circumstances, with the U.S. and many foreign economies expected to slow or possibly contract further, it's likely to see the index decline going forward. This concludes the London Forex Broadsheet's daily wrap of the markets. We appreciate you making us part of your trading day.
All contents of the LFB are for informational purposes only and should not be used as a replacement for research by an individual investor, trader, or licensed investment professional. Neither the LFB nor any of its affiliates shall be liable for any errors, omissions, or for any actions taken in response to the information contained herein. We hereby make no representations or warranties regarding the accuracy of any information contained in this broadcast or on our site. Forex market trading involves special risks and may not be suitable for everyone. Each investor or trader should assess their financial situation and risk tolerance before proceeding. Copyright 2007, LFB Services, LLC. All rights reserved.